All right, welcome back. The Investment Committee is answering some of your questions. First up, this one goes to Stephanie. It's from Andy in Iowa. What are your thoughts, Steph, on Anaplan?
I like it. I'm not buying it for the quarter. It's always volatile around the quarter. But if it were to be weak on the quarter, I would absolutely buy more. It's down 13% year to date. It trades at a 3 multiple point discount to the group. It's a play on enterprise spend recovering, and we've seen that. Workday, Cisco, Microsoft, Network Appliance, all have started to see an improvement in enterprise IT spend. This is exactly on that theme. And oh, by the way, you have a new CFO who I think is going to do a much better job in terms of execution and communication.
All right, next up for Josh, and it's John from Michigan. He asks, do you think the long-term trends for Upstart Holdings will continue? And by the way, Josh, you actually had the name as one of your second-half picks back on late June 22nd on the show. Stocks up more than 80% since then. Great stuff. So what do you think now?
Yes, I was just going to say, like, a lot of the gains that I would have expected in this stock over the next couple of years have just occurred in the last 2 months. And that's because this company is executing. If you remember, they are being like the fintech outsourcer for all these banks that can't build it themselves to originate loans on the internet. And then they're keeping a piece of that loan as part of their upside. It's a sick business. It's up huge. What I would do if I owned the stock already and you expect more gains, I would probably use either a 10 or a 50-day trailing moving average, and I would look at that on a weekly closing basis, the 50-day. So if you see a Friday close where this stock closes below its rising 50-day, that might tell you the trade is over, time to exit, that kind of thing. That's how I would handle it from here.
All right, Liz, from James in St. Louis. Having recently started a Roth on my 30th birthday, I'd like to add a longer-term ETF, the QQQ, JEPI, or maybe something else.
Hi, James. First of all, I'm jealous that you're only 30, but what that means is that time is on your side, and I've got a better idea for you. I would do an ETF that is the S&P and split it with a small cap ETF because you're going to ride through a lot of market cycles in that time, and there's probably good upside and good diversification in both of those.